Hi, welcome to Le Tour de Finance Autumn 2023 Italy. We're in Abruzzo in the Castello Semivicoli, and I have got with me today Judith Ruddock from Studio del Gaizo Picchioni, which are a group of commercialisti specializing in helping, let's say, foreigners living in Italy, English-speaking foreigners. I am thankful for you for coming, Judith. Very kind. As my other interviews, I've actually prepared a list of questions. Most of these questions are taken from you, and you're asking me these on a regular basis. And so I want to put it to the expert to answer these questions for you. So without further ado, we'll crack straight on, and Judith will be able to give you an expert opinion on some of the tax questions that most people are facing for their lives in Italy. Judith.
Yes.
Agenzia delle Entrate. Okay. My personal experience is that within the last 10 years, they've got a lot more sophisticated. Redditometro, spesometro, all these kind of things that they've developed these systems. So my main question is, for people, given the element of tracking that they've got available to them, whether they use it or not is another question, but the tracking available that they've got to them, what are the main mistakes that people are making when they're either moving to or they're already living in Italy when it comes to declaring your taxes properly?
Okay, I think probably the most common mistake that people make is either failing to declare or under-declaring. And there's several reasons for this. People fail to declare often because they don't consider themselves tax resident in Italy. And because it's quite difficult to get information on where you are tax resident, and because obviously when the UK in particular was part of the EU, everyone felt it was all a bit more relaxed and we were all friends and we could cross the borders easily and it didn't make a lot of difference. I think there is some confusion in people's minds as to whether they are tax resident, and they do tend to feel it's more like a sentiment. I feel that I'm still tax resident in the UK, or I feel that I'm still tax resident in the US, and therefore I am. And it isn't as simple as that, obviously. And the other one, mostly why people fail to declare, is because they don't believe that a return is necessary. And again, that could be because they don't think they're a tax resident, or because they don't understand the scope of Italian taxation. So they just think, I don't have anything which Italy would need to tax me on, and therefore I don't need to make a return.
Yeah, sure. I guess one of the conversations that I have a lot of people on this score is it's a message that I keep hammering home on newsletters and things all the time, is the kind of definition of residency, what makes you residency. I mean, I won't go into it here, but you know, it's the whole criteria of how long you stay and registration, etc. But I hear it a lot, this thing, you know, and I still get, it surprises me actually. I've been doing this job now 19 years in Italy, and I'm surprised that I still get the question, am I considered resident? In fact, I got it recently again from somebody and who you know, been living here for quite some time, and yeah, it does shock me. But anyway, you know, I think we know. I would say, and I don't know whether you would agree, that if anybody is unsure, then they should just ask the question.
Absolutely.
Either me, either you, or whoever they might use for it. I have to say, sorry. Given this is a conversation that I like, one thing that I've seen over the years is, I guess, well-meaning, but probably not so knowledgeable estate agents who have informed people buying a holiday home, for example, that they should take residency to pay less VAT on their home, 2% instead of, sorry, stamp duty, that's right, 2% instead of 9%. And I just think that's one of the most horrible things that could possibly happen. I guess you've probably seen that as well.
Yeah, we see that all the time. People find themselves, the question is whether you are registered on the anagrafe. That's the list of residents which is held in every comune. And by and large, you do this. If you do this, you're declaring that you're a resident in Italy. And after you've been on it for 183 days, so the majority of the year, you are considered tax resident in Italy. But this is also the criteria for obtaining, as you were saying, the 2% stamp duty on the purchase of a property. And obviously that's hugely attractive to anybody coming to Italy. But it never seems to be explained to purchasers of properties that these are the consequences if you do if you do put your name down on the anagrafe. After 183 days, you'll be considered tax resident. And that is the commonest way that people become tax resident in Italy without realising. I mean, these are people who often, are living their lives somewhere else.
Yeah,
So this is a second home, it's a holiday home. So it can be the case that you can argue, despite the registration within Agrafé, we're seeing a little trend now where people can actually argue that, despite that, I'm not actually resident in Italy. But it's a fight with the Agenzia delle Entrate.
It's not a fight that I would want to get into, to be honest. If I'd done that accidentally and then the Agenzia delle Entrate picked me up, it's not a fight that I would want to be trying to fight with.
I don't think anybody really
would want to with any tax authority anyway. Okay, cool. Given that we're talking about this, you specialise in foreigners, obviously living in Italy or moving to Italy. Given that, we're talking about a tax authority, given that we know now that tax authorities share information across borders, so are you seeing more periodic checks? I know we were talking this morning about some sort of letters that the agency have been sending out, but are you seeing sort of periodic checks, letters coming out, things that are relating to maybe assets or incomes or whatever what people have held overseas, and that the agency are picking up from information shared from another tax authority?
Absolutely. In previous years, several years ago now, any information that was received by the Agenzia delle Entrate was only received because they went and asked for it. So they'd find somebody they wanted to look into, investigate, they'd see it was a British national or a US national, and they would ask the respective tax authorities for information about them. Now, it's all automatic. And the UK in particular seems to be very, very chatty, and a lot of this information is just being passed willy-nilly to the Agenzia delle Entrate. And obviously, with computerization, it's very, very simple for the Agenzia delle Entrate to have all this information and to, automatically, there's lists of people being pulled out. For example, as I was saying, if you're registered with the Comune, registered on the Anagrafe, but you don't have a tax return in Italy to your name, that's a very valid motive, reason for the agency to say, why don't you have any tax returns in Italy if you're registered and you appear to be tax resident? There may be a valid reason why you're not, but it's always worth asking a question. And it is now so simple for them to ask that question. And we see frequently people coming to us with a query from the agency, and they're saying, we understand you have a property in the US. We understand you have a property in the UK. We understand you had capital gains in the UK last year. There was somebody who had a property in Greece, and that came via the UK tax return, came back to Italy, and they're saying, oh, we understand your property in Greece. Astonishing. And we see it with rental income, we've seen it with benefits in kind. There's almost anything, and I suspect it's everything. I think they're just giving the tax returns willy-nilly. All the information is going to the agency, and they can then pick and choose and say, can't see this being declared, can't see this being declared. And as I said at the beginning, part of the problem is that people don't realise that they need to be declaring everything in Italy because they're a tax resident in Italy. No, I see this a lot as well. I don't want to harp on about that too much, but let me go through a very, very specific question that I'm sure you can answer very quickly. Scadenza fiscale, so the date on which you should declare your taxes in Italy and when you should pay your taxes. Because it seems to move every year. It does seem to move every year, but I think what is actually happening is that it isn't moving every year. It's just that accountants in Italy are in a bit of a straitjacket. Or at least they should be put in straitjackets. The first instalment every year, which is the balance of what is due on the previous year plus the first instalment for the current year, because you pay the balance of the previous year and you also pay 2 instalments on account of your current year. That has always been due 30th of June, at least where I say always, the last 10, 20 years, 30th of June. And the second instalment is due at the end of November, 30th of November. And that's always been the case. The problem is that the Agenzia works to a very tight schedule, so it doesn't seem to be able to produce the form for the return each year within a reasonable timescale to allow the accountants to actually meet that 30th of June deadline. So what do? Instead of being a bit more transparent and saying, okay, hands up, they're working from a 6-month scale, because if the tax year finishes at the end of the year, December, and by 30th of June you're supposed to be paying your tax. So that's 6 months. In England they have 9 months. In America I think they have 10 months for those overseas. So it is they are very limited there. But instead of extending it, what they say is, well, we'll just you can pay the 31st of July, and you pay a little bit, just think of 0.4%, a little bit of a fine because it's a little bit late. And then if you pay up to September, I think it's 1.67% or something, a little bit more, and then you can also pay, for the rest of the next year, up until the 30th of June the next year, and then it'll be a bit more, it's just under 4%, I think.
Sure.
So it's a matter of paying a little bit on top. Now, obviously, to people coming from more organised societies where things are done more in an orderly way, that is quite a shock. You think, no, if it's 30th of June, then I must pay by 30th of June.
Yeah.
And we do our best to accommodate people who feel that they don't want to pay a penny more.
Yeah.
But the fact of the matter is, you're in Italy, and the Italians really, they're not that interested in paying their taxes, and they're certainly not interested in paying them at the start of the summer. If they can find a way to put off the awful date until after the summer, then they will do that. If it costs them a little bit more, then that's fine. They're not that bothered.
I have to say, from that point of view, I agree with the Italians, because there's nothing worse than being on the beach in the summer and your commercialista, just before he's about to go on his summer break in August, sends you an email saying you're going to pay X amount for your tax and it needs to be in on the 14th of August, which, as we rightly know, the 15th is the big Ferragosto day. I've had that experience a couple of times, and it gives me palpitations, I can tell you. It's not particularly enjoyable. So if they can bounce it a little bit, it's actually better from it. But I appreciate it because of a bit of stress.
Yes, and also, I mean, the more important date is the actual filing date, and that, as I said, is at the end of November. Right. And that's the date you really don't want to miss, because then there are implications and consequences. Right. As to when you pay the tax, the agency doesn't care. It's not like it's some people feel, it's a black mark on my record if I don't pay on 30th. No, it's a choice. You can pay 30th of June, you don't pay any extra. Right. If you want to pay a little bit later, you pay a little bit extra. No blot on your record. Right,
fantastic. That's good. It's good to know. Okay, this is one that I think most people are going to get stuck on. Okay, or we've seen a lot of people get stuck on this one. So I don't even know how to describe it, quite frankly. Okay, so it's the law of holding an amount of foreign currency over the value of, let me put this down for you, €51,645.69 in foreign currency for more than 7 days, and then exchanging some of that into euros, which then becomes a capital gains tax event, correct?
Effectively, yes. Exchanging it to any other currency.
Any other currency, yes, that's right. Yes,
so you're right. Sterling or into dollars or anything. Yes, and just I don't, as they say in Italian, I don't break many spears on behalf of the agency, but to not make them seem completely insane, that strange figure is actually it's a million old lira. Yeah. So that's why it was written in the times of the lira, and that's why it's got to be a million, and now it is 51,600. Fair enough. But yes, if you have that amount, and basically what they're talking about is if you have that amount in a non-euro account, so cumulatively, non-euro accounts, for more than 7 working days during the year, then yes, every conversion that you've made of that money is potentially a capital gain event. Yeah. So potentially you need to be calculating, did I make a gain or did I not? Like you say, well, of course I didn't make a gain. I had this money there and I bought something in euros, and where's the gain? It's a notional gain. They're saying, can you compare the value of that, the sum that you withdrew, let's say, $1,000. You withdrew $1,000 and converted it. When you actually deposited that $1,000, how much was it worth in euros? And when you did convert it into euros, how many euros did you get? Yeah. And if you got more euros when you converted it than the value when you deposited it, that's a capital gain. That's a notional capital gain. And so they're asking you for every single transaction throughout the year in which you've made those conversions to do that sum and work out if you've made a notional capital gain or not. Yeah. Now, there are 2 ways of doing it. One, as I say, is comparing the original value of the sum when it was deposited. The other, probably easier one, is to say, I use the worst case scenario. So you just take the worst conversion rate of the month in the tax year in question, and you use that and apply that to find out the original value and compare it to the value that you actually received. It's a bit of an iffy one. I mean, it's an area which nobody really was aware of until about 3 years ago. Yeah, it was about 3 years ago. It came out of nowhere. It was like, what? What is this? It's there. Nobody had ever applied it before. In our experience, we've only had one client approached for this, and that was because they had their non-euro account with the Bank of Italy. So the evidence was very much under the noses of the agency. Sure. And in that case, they sent a letter and they asked, are you sure you haven't? And the client made the calculation and found that he hadn't made a capital gain, and so it all left there. So it's. I think people get very wound up about it, and I can understand that because obviously you want to be compliant. But in the end, it's usually a calculation that you can carry out if you really want to. Often it results in no capital gain anyway.
Yeah,
so
I noticed that as well. There's nothing.
But if it's a sort of thing, if it's something you want to worry, you want to be confident about, then consider if it would be possible to make the calculation reasonably easily. It does tend to depend on how many transactions you've done during
how many
year.
deposits you've got, how often that money's coming over what period. No?
That's right. If you're somebody who, for example, who hasn't got an Italian bank account and you're relying on your card, so every time you go out, you're spending a card which is attached to your US or UK bank account. And obviously, you could have 20 transactions a week, more 50 transactions a week, and it's going to be very, very complicated. Not long, a very, very long calculation to make.
Yeah, sure.
So a lot of people, as getting into the Italian sort of way of thinking, you know what, it's going to be a long calculation. If they ask, I'll make it, and I'll pay a little bit more on top if I have made a capital gain that hasn't been declared. But life is too short to be worrying over much.
And the weirdest thing is that obviously, like you said, most of the calculations I've done with clients actually don't end up in a capital gain at all. And but the big one, of course, the big complication is that where those foreign deposits have entered the bank account or let's say accumulated over a period of time, then it's what are you supposed to do? Take the reference euro exchange rate for every one going back, and I mean how far do you go back? I mean if they sold the house and a big deposit of money has gone into an account, and we know on that date, it's actually not that complicated to do that calculation. But I mean it depends on the circumstances.
That's right. And if you do have as I say, a lot of transactions building up, accumulating that, it's obviously possible. In which case, you'd probably use the worst month.
Worst month. Great, good. Okay, that clears that up.
Sorry, just to add. I mean, so obviously the way around, the way of avoiding this problem altogether is to keep your balances under 51k cumulatively. But
hang on a minute, 51,645.69
euros.
Euros.
Corrected, yes.
So it's not the actual currency or that you're holding, the foreign currency. It's the equivalent in euros. That's the thing, is it?
That's right. Yes. Yeah. Or if you're already in the situation where you do have more than that figure, then you really need to spend the excess, the amount that's taken you over that amount, in the same currency. So, for example, if you're holding over that in sterling, if you can spend it in sterling, then you've made no conversion. So there's no capital gain transaction arising. And then wait until you bring it down under 51,000. That's the way to do it. I always hesitate before giving that advice because I really don't like to tell people you've got to go and spend your money in the UK or spend your money in the it's your money and you do what you like with it. But if it is something that concerns you for the future, and that is something you could reasonably simply do, then that would be a way around
absolutely.
the problem.
Good. Just going back to one of the points before, kind of at the beginning, we were talking about automatic exchange of information, common mistakes that people make in the tax return. I sort of should have mentioned this before, but I guess there's kind of also a bit of a misunderstand when people say, so going back to your point, you were saying people say, I'm not resident, or I didn't know I was resident. For whatever reason, through these property agents or whatever, that kind of maybe misled somebody. So there's a misunderstanding of the double taxation agreement there, I guess, in most cases. Do you want to kind of expand on that a bit?
Absolutely. We get a lot of this. I got one just the other week, actually, somebody writing in and saying, well, I understand under the double taxation agreement between England and Italy, I don't need to pay tax twice on the same income. I've already paid tax on this income in the UK, therefore I don't need to pay it in Italy. So it's quite difficult to explain. But, I mean, you're right, that's what the double taxation agreement says, but that's not the effect of it. That's not the impact. It doesn't mean you can choose where to pay tax, just pay tax in one or tax on the other, but it doesn't matter. No tax authority in the world is going to accept that the fact that you pay tax in a different country excludes you from any obligation to paying tax in your country of residence. So if you're thinking that it means I pay tax on this income in the UK, therefore I don't need to pay it in Italy, then that's wrong. If you think it means I pay tax on this in the UK and therefore I can set off that UK tax paid from my Italian liability, you're getting a little bit closer, but it doesn't apply to all circumstances. What you should, the easiest way to look at this is to say, I'm tax resident in Italy. Therefore, Italy is my primary tax jurisdiction. I basically have to think that I have to pay 100% of my tax bill to Italy. and I have to pay it on Italian terms, which means not only paying on 100% of my worldwide income, but also declaring my assets overseas, so properties overseas and financial assets overseas, and I need to pay the wealth tax on that. So just think of that as basically what the scenario is. And then there are basically two simple exceptions to this. One total exception is for government service pension income. So if you have pension income from a lifetime of work that you have done, as for example a civil servant, as a firefighter, the military, teachers in state schools, etc., those sort of pensions are defined as government service pensions. They do not need to be declared in Italy, and they are not taxed in Italy. So they are
unless, I would just add, unless you're an Italian citizen.
Unless you're an Italian citizen,
yeah,
yes, that's the case. Sorry, I'm assuming we're talking about
sure.
non-Italians.
Just residents, yeah.
In which case, that is excluded entirely from your Italian tax return. That is basically the only exemption. The other partial exemption, or rather partial different treatment, is for income on which you have to pay tax in a different country. You have to pay tax, you're obliged to. And this is because it's got a territorial right over the income. And here we're looking at basically rental incomes from properties in a certain country. So if you rent out your property in the UK or in Greece or wherever it is, the income that you make from that rentals needs to be declared first and foremost in that country, so in Greece or in the UK. And in those circumstances, you're entitled to set off the tax that you've paid overseas from whatever liability the Italian you have on that same income in Italy. And that's all the DTA does as regards your tax. So total exemption for government service pensions, and you can set off the tax paid overseas if it's been correctly paid overseas, if it was correct for you to pay it overseas. Anything else, there is no exemption, there is no tax treatment, there is nothing in particular. And I'm looking in particular at this at people who receive pensions from overseas and they have tax withheld, and they say, oh well, I can set that off, can't I? So well, no, you can't. You can't set it off because it's nothing to do with the Italian taxation. They're not interested in you setting off tax that you've paid in the UK or the US because it wasn't
directly out of the tax return. It has to be done through the. It
wasn't directly. You weren't required. It shouldn't have been set off basically because you are now tax resident in Italy.
Yeah, sure.
And so yes, your only recourse is to go back to the tax authority that has withheld this tax and say, look, I'm an Italian tax resident, and therefore I should be receiving this gross. And can I have a rebate for any tax that I've paid?
Yeah, sure. Okay. I think there's also an element to the double taxation treaty which is that creates a hell of a lot of confusion. Is a tiebreaker clause. That crazy clause where you sort of say, well, if you're considered this, then you're not considered the other. But, my retort to that is, let's look first of all at the definition of residency and see whether, you meet the criteria of Italian residency. If you are, then, you may decide to pay your tax in another jurisdiction. But the point of the matter is that the tax authority may not take the same view. And if you then so let's say the Agenzia delle Entrate said to you, no, you need to pay your taxes here, and you try to argue, well, under the tiebreaker clause, my business, my life, or whatever is there, actually you're still going to have to get into argy-bargy with the Agenzia delle Entrate first, and go through a hellishly long process of trying to prove yourself. They probably want upfront payment anyway, I would imagine, and then you're going to have to fight to get it back. I mean, I don't know why anybody would want to put themselves in that position. To be honest, it's a thing that I'm hearing less and less these days, because I think more and more people are getting aware of it, that it's just such kind of woolly element of that the double taxation treaty that it's
an interesting area because it does appear actually to be a growing area.
Right,
because,
does it?
Yeah.
I was interested you said that.
Because previously the agency were very clear. If you were tax resident by the Italian tax rules in Italy, they didn't want to know anything else. They didn't want to know anything else about anything. They wanted their tax, and you were tax resident, and that was the end of the argument. We have lately seen that people who actually appeal to the DTA and this Article 4 residency and say, look, under these hierarchies, these tax breaker, tiebreaker rules. If I apply them to my case, I think I'm actually tax resident in the UK. If the circumstances exist, if they can back it up with the correct supporting evidence, then they're starting to win those cases. The agency is starting to back down and say, well, actually, yes, and it's becoming more active, obviously more sort of alive as an area because of Brexit, where people, they want to have, they want the sort of residency or whatever they think they need in Italy to sort of stake a claim in Italy to get their EU, eventually their EU citizenship. But they're still living their lives in the UK, and so they're saying, no, I'm still resident in the UK. And there is some, something that could be said in favour of looking into that sort of investigation. It isn't something to abandon entirely because it is moving in that direction. But if the truth of the matter is that you are basically
resident here,
you're living year round here, enjoying the great life in Italy, then you're on a hiding to nothing. Trying to say, well, I've got a friend over in the UK, well, more friends in the UK than I have in no, it's not going to work. So it's something, yes, it's worth analysing, worth looking at. But by and large, if you're a tax resident, you're a tax resident. Okay.
Okay, let's leave it on this. You mentioned the word positive there, so I want to let this out because it's all doom and gloom when we talk about tax, but I want to leave this on a positive note. So give us some positive aspects for what's happening. Let's leave it on a bad note.
Absolutely not. I mean, I think there's a lot to be said for Italy because it's very inventive in sort of drawing up incentive ideas, things that will encourage people to move to the country. And so we do seem to have something for everybody. I mean, for workers, we have the Impatriate scheme, which offers an incredible, just anybody moving anywhere in Italy. I mean, sorry, not the south, is taxed on just 30% of their taxable income for 5 years, and then there is also the possibility to extend that for another 5 years on certain criteria at 50%. If you're in Sicily, if you're in the south of Italy, that's going to be taxed on 10%. Incredible, 10%. That's a wonderful, gift to anybody coming into the country from outside. For workers. For pensioners, there's a 7% scheme. If you come to the south of the country, in certain small comunes, southern regions, comune of under 20,000 people, and some of the earthquake-affected territories.
We have a list of those actually.
And then you are taxed on 7% of everything you hold outside Italy. Which is why 7% income tax is just unheard of in Italy. So that's a fantastic opportunity. For high net worth individuals, we have the 100,000
flat tax regime.
So if you're lucky enough that 100,000 tax a year is a bargain, then that's something you can do, and you don't have to declare anything else. You don't have to declare any of your outside assets. You're relieved from all these other taxes. And then we have the renovation credits as well.
Wow, they're just kind of crazy, so much.
I mean, we had the super bonus, which I must admit I was very sceptical about from the first. It didn't work. Surprise, surprise, when they're offering you 110% of the amount you were spending on your renovations, oddly enough, the money ran out. And it fell flat in its face. But less spectacularly, we have what were originally the 36% incentives, which are now mostly 50% or 65%. If you're doing renovation work, and so many people who come from out abroad are doing renovation work, getting an old roodery or an old villa, then you're getting the offer of 50 or 65% tax breaks spread over the next 10 years. I mean, it's a great incentive.
It is.
To work and to do the work and to stay in Italy.
And there are so many of those. I mean, it's almost difficult to try and keep on top of them because they're changing and moving all the time.
That's right. There's the bonus verde.
Bonus verde, because acqua potabile and all these kinds of things.
There's all sorts of things there. So there is a little bit of something for everyone, I think. And it's certainly coming from a UK tax scenario that we don't have anything remotely similar to that. And it will be obviously in function of the fact that the tax rates in Italy are higher, so they recognise they're not necessarily very attractive to people to come here. And that's why they're there. I mean, they work very much to the disadvantage of Italians who are already here. But
don't I know?
For people who want to move to Italy, these are good things to be looking into.
Okay, great. Well, that's a good note to leave it on. Thanks, Judith, for coming over, supporting the events, and also for having this chat with me today.
Pleasure.
It's been great to do these interviews. I hope you've enjoyed the content, and we look forward to seeing you at any events in the future. Thank you.